Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't, so let's get started. Now this is another stock market weekly recap, guys, for the week of December 11th, 2017. So if you've been following us, welcome back. And if you haven't, what we do is we look at the previous week in the stock market, see what's going on, look at some important news stories, individual stocks, couple mutual funds. So let's get into it. So hopefully you guys had a great week. So let's look at what the stock market brought for us. First, looking at the Dow Jones, we can see that they are still halfway over the 24,000 mark, so very nice. And this week they are up 1.33%. The S&P 500 index, they closed up 0.92%, close to the 20% range for the year. And of course the NASDAQ, which was the best performer of the indexes that we look at, of course because it's with tech stocks, up 1.41%. So pretty solid week in the stock market overall, like we could see in the indexes. I know that the federal interest rates that was going on this week, they did increase the interest rates like expected. Now it's around 1.25% to 1.5%, and for next year they're going to have those gradual increases as well. I think they said like 3 per year. That's what they did this year, so they're basically projecting the same for next year, and I think the year after that. So slowly but surely we are increasing in rates. And like I promised last week, we're going to be watching Bitcoin just because it's a hot topic right now. So first, let's look at their price. I did take a picture of this on Sunday morning. They are above 19,000, guys. Very, very, very close to the $20,000 mark. You could see just in the past week it went up 28%. So aside from Bitcoin, guys, which is cryptocurrency, another type of cryptocurrency that just did ridiculous this past week, it skyrocketed, was Litecoin. Litecoin right now is just over $300 a share, and just last week you could see in the beginning of the week that spike. This past week, 1 week, guys, it is up over 100%. So that's right. In 1 week, you could have doubled your money. Does this make it more look like a bubble? We'll have to see. I did have another video talking about Bitcoin and if it is a bubble. A lot of people think it is. A lot of people are getting into it. It's so parabolic and just skyrocketing every single day. Well, mostly every single day. It's just nuts, and that's why I want to watch it with you guys just to see what happens with it. I'm not an investor. Just do your own research before you get into it. Just because someone else is, it's like, oh, you got to invest in it. That doesn't mean you should. Now, another huge thing that happened earlier on in the week, and I really didn't look into it until later in the week. When I say later in the week, I meant last night. But I did look into net neutrality and what's going on with that. Looks like net neutrality was repealed, and it seems like a lot of people don't like it, which is kind of surprising how they even repealed it when so many are against repealing it, but it seems like it happened. So I was doing a little research on how to describe it really quick. Is that net neutrality, basically any type of internet service, is, if you think of a highway, all the lanes are going the same speed. So, you know, like Google, Netflix, or any of those big guys, they have the same exact traffic as anyone else, even smaller people, you know, like entrepreneurs, smaller businesses, stuff like that. And now, instead of having all of those lanes basically all the same, now they have slow lanes and fast lanes. So to get into those fast lanes, those companies, like what we just saw with like Facebook, Netflix, Google, they're probably going to have to pay to be in that fast lane. And those costs could even move on to the consumers, us. So that's why a lot of people don't like it. Now, looking at it from that perspective, it basically forces larger companies to be more out there versus other smaller guys, entrepreneurs, smaller businesses. So there's no more like equality, and I feel like that's kind of a problem. Of course, we're gonna have to see how it goes, but it definitely does seem very money driven toward these huge companies that are going to have to pay, and then we're probably going to have to pay more as well. But on the other side, if you are an investor, I'm assuming you are if you're watching this type of stuff, if you invest in these internet service providers, ISPs, the big ones like AT&T, Verizon, there's a few other ones, Comcast, but they're going to be making more money just because they're going to be charging these larger companies. So that's enough about that, guys. Let's get into a regular scheduled program with individual stocks, starting off with Apple. Apple closed at 173.97. This week was actually very nice, up 2.72% in just the past 5 days. Year to date, just over that 50% return. Holiday season is coming up. New iPhone, guys, so a bunch of people are probably trying to get their hands on it, and I think iPhone sales growth, especially for 2018, is going to look just fine, because it is the biggest, best, and everything great, best smartphone out there, so a bunch of people have to have it. So I think Apple for the future is looking great. Moving on to Disney. Like I said, guys, Disney was going to rebound, and they are. So we can see they closed at 111.27. This week they were up 6.75% for multiple reasons. Now, year to date, they finally are positive just for this week alone. But, of course, Star Wars did come out. We're going to have to see what news-related stories are going on for next week. But it's probably destroying the box office. A bunch of people are going to see that. But you can see on Thursday alone, it jumped 2.75%. But that's because they are in a deal with purchasing assets of 21st Century Fox. And they have, their TV and streaming services. So they're definitely, their assets could definitely help Disney. So like I always said, guys, if your stock is down and if it still is a good company, fundamentals are still great, hold on to it, especially for the long term. If something goes down, in most instances, it will rebound and continue going higher, like what's going on with Disney right now. So we'll keep in touch with that. Moving on to some tech, Facebook, 180.18. This week wasn't huge moving, but still very nice, of 0.66%. Moving on right along to Apple, Alphabet, Google, it's all the same, but Alphabet, I don't know if anyone calls it Alphabet, it's Google, but they closed at 1,064.19. This week actually very nice, up 2.62%. So those were a lot of the tech giants. Moving on to our Starbucks. They closed at 58.29. And this week they were down a little bit more than 0.5%, but you could see that drop on Friday. Now, I did a little research into this fairly significant drop on Friday, and it seems like a bunch of people are kind of scared with their Starbucks's competition. Of course, they have McDonald's and their coffees, they have Dunkin' Donuts and a bunch of other things. When this increased competition, if someone buys, let's say, Starbucks coffee in the morning, of course, Starbucks will want them to buy it in the evening, middle of the day as well. But those types of sales kind of aren't there. So the demand isn't has crazy growth as it had in the past. But honestly, for the future, I think it's quite fine, especially with their new roasteries coming out. So if you're looking for like a huge growth company, I really don't think Starbucks is that, but I do think that it is stable. It has a dividend. So I think it's not excessive growth, but I think there is still growth there. So for a long term, I'm really not worried about it. Again, I'm continuing to keep my promise to you guys. If I hear of other stocks that come on my radar throughout the week, I want to tell you guys about them. One that got my attention, especially on Friday, was Sirius Xm Radio, that satellite company that comes in basically most new cars. But definitely a cheaper stock, around $5.37. Warren Buffett actually ended up investing a small, obviously compared to his net worth, a small amount into it earlier in the year. I did a little bit more research. He sold about like 20% of his holdings a little while ago, not all of his holdings, but just on Friday alone, you could see toward the end of that chart, it did dip a little bit, and that's what interested me, just because of their music royalties. That rate is increasing from 11% to 15.5%. So what that means to you guys is that their expenses for streaming this music and their royalties, that expense is increasing. So that's why it dipped a bit. No one likes increasing expenses. But year to date was over 20%. So just because of that small dip on Friday, I think it was down around 5% just on Friday due to that news. And I was thinking of investing a small amount into it, nothing too crazy, but I'm not too sure. Then I found out of another, well, first of all, Sirius XM, fun fact, was actually the first stock that I ever bought in the stock market. That might be a story for another time, but that was my first stock. But I ended up doing a little bit more research into this company, Corning, and I think I might actually invest in this very soon. Again, just want to give you guys a heads up of some things on my radar. Of course, do your own research. Don't just get something because I'm getting something, or anything like that. But kind of just wanted to give you guys an idea. Year to date did very well, of over 30%, so it's definitely on my radar. Little backstory of Corning: they are a glass provider. It's like a 150-year-old company, but they do have Gorilla Glass, and Gorilla Glass is used on a lot of smartphones. It is a small part of their business. Their business has a bunch of different things going on. They are diversified, and they do have a dividend. So that's why I'm kind of interested in it. So I'll let you guys know, just something to think about. I actually might go into a little bit more detail on that. I do believe I am starting the type of thing where, like, what stocks I'm looking at each month. So I might actually put that in for next month, just so you guys know a little bit ahead of time. But those were our individual stocks. Let's move on to the mutual fund we normally look at. Fidelity Contra Fund. This is their 1 month chart, of course, but they were 123.05. This week they were down slightly of 0.2%. Again, you could see that huge drop in that graph, and I think it's just that they're selling off some positions just because it's the year end. They're kind of making adjustments to their portfolio. I think that's what's going on, especially with a mutual fund. That drop, I think, was like 5% in a day. So definitely a big mover. Nothing to worry about, in my opinion. So I think this is one of the longer videos, guys, but a lot of things are going on. Of course, the tax break and tax reform, that's still going on. Still talking about it. It seems like it's going to happen. Is that going to help the economy? We don't know. It could definitely help businesses, obviously, just because the lower in taxes. Is that better for everything? Couldn't really tell you, but we'll have to see what's going on. So if you have any questions, comments, concerns, please leave them down below. I love to hear what you guys have to say. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because not many people do, guys. So thank you so much for watching, and I'll see you in the next one.